Hey everyone, Josh Martinez here, and welcome to this week's idea. So this week's idea is the Nasdaq 100 on a 1 hour time frame. Now the market was in a downtrend. We were making lower lows, lower highs, and sellers were in control. Now the market recently broke and closed above that downtrend line, entered into the buy zone, and we started to create this bullish trend of higher highs and higher lows. Now applying our up Fibonacci's, we discovered that we are inside of an up Fibonacci sequence. As of right now, we do have a 236 retracement, making the extension the 1.61. The best place to put our limit will be 26051.00, about 3,779 ticks above the market. The best place to put our stop will always be below the 1 boundary. So in this case, stop is 23876.25. Now the market is still retracing and is looking for that low higher than the 1 boundary. So one of the things we can do is bring in what's called a counter trend line break, which is this purple line. When or if this market breaks and closes above that counter trend line break, it could be the signal that the short-term retracement is over and the long-term extension could begin. If the market does not break above that purple line and the market just keeps selling off, we can stay out of the market, preventing a loss, which is also a good thing. Now, the risk is large, the reward is large, but one of the things you can do is turn to a smaller time frame, such as like a 5-minute time frame, and look for an entry methodology with less risk in the direction of that 1 hour target. However, I wouldn't really be a good idea to do that unless the buyers truly take control, meaning that once or if the market closes above this purple line would be a really, really good time to go to a smaller time frame, look for a smaller setup with smaller risk, smaller rewards, and just go after the overall rally. All right, everyone, this concludes this week's idea. Remember, there is risk involved when it comes to trading. You should never invest money you cannot afford to lose. Always keep risk management in mind. Understand that we're not CTAs, which stands for Commodity Trading Advisors. What that means is we're not here to give customized investment advice. We're not here to tell you to enter in or exit the market. We're not financial advisors. We're not money managers. We don't trade for people. This is purely for education reasons only. There is substantial risk involved in trading. You need to be aware of that. Past performance is not indicative of future returns. There's no guarantees of a positive outcome. There's risk involved in every single trade. You should be aware of that before you make the decision to be a trader. Look at us like a newspaper. We'll share with you this research. We'll walk you through our trade ideas, but ultimately what you do with this information is completely up to you. All right, everyone. My name is Josh Martinez. Hope you have a wonderful day.